Well, hey guys, what's going on? This is Channing Moore, the broker owner of Bayou Mortgage, and in this week's video, I want to talk about the fact that you can own your very own home. That's right, you can own your own home for the same amount of money that you're paying in rent, a lot of times, maybe even less. And so a lot of times home buyers don't know that getting a mortgage can actually be cheaper, especially in this environment where rent is already this year, it's 7% higher than it was last year. And that's pretty consistent with the amount of appreciation in rent prices year over year. It's usually around 5 to 6%, so a little higher than normal. But rent is always going up. Meanwhile, when you have a mortgage and it's fixed and it's a fixed rate, it's always staying the same. And so what I would like to do today is show you exactly how, by looking at some of the homes for rent versus some of the homes for sale, and show you exactly how you can own a home for the same payment you're already making, or very similar, or like I said, maybe even less. So let's jump right in. All right, guys, so as I was saying, what I want to do is hop into Zillow, which you guys are all familiar with, and show you how the cost of owning a home can be the same or less than the cost of renting a home. And so I've got on two different screens, rentals in Denham Springs, Louisiana, and on the other, I've got homes for sale in Denham Springs. But let's see, let's just make sure we're getting them all here. So, and I just want to show you the differences in renting versus owning. Okay, so let's just dive in. And as you can see, it's pretty common for a one-bedroom apartment about $1,000 a month, a two-bedroom apartment about $1,300 a month, a three-bedroom apartment about $1,400 a month, and there's all these different apartment complexes you can go look at, and you can kind of see that that's very similar across the board: $1,200, $1,300, $1,400, right? For houses, this is an 1,800 square foot house. It's 18. You can see 1,600. So it's pretty common that you'd be paying somewhere between $1,200 to $1,600 a month in order to rent. Maybe a little less. Maybe you're in something like this and it's $1,000 a month, or a little smaller apartment or whatever. But let's just see. Okay, so let's just pull up, because it'll be easier to do it this way. You've got a 1,400 square foot house right here. It's $1,600 a month in rent. Okay, and so when you go and you look at the value of this home, let's see if we can do that on a rental here. Look, the home was originally purchased. Look, it was $169,000. Okay, that's what the home was purchased for before it turned into a rental a month later. See, $1,600 a month. Okay, $1,600 a month for this home, and it's $169,000 a month. Okay, now just so you know, I'm going to do a little math here on my phone. If you were to finance a $169,000 house, you would get an interest rate of around 3.25. If you got great credit, it'd be under 3. Even if you don't, it'd probably be under 3, but I'm going to be conservative here. So the mortgage payment, this is $1,600 a month. On a $170,000 house, the mortgage payment is $735 a month. Okay? Then you got to add in PMI. That's $850 a month. And then you got to add in your insurance and your taxes. And I'm going to show you this on the screen here in a second too. That's an extra $291. So $291 plus $850 is $1,141 a month. So if you wanted to purchase this house for the $169,000 that it was purchased for, and we know that there wasn't some big massive renovation done on this house to make it worth more, because it was literally purchased in September of this year, and then it started being rented not even a full month later. Not enough time to do any kind of full renovation. So to rent it, you're going to pay $1,600 a month. To own it, you'd pay $1,150 a month. Okay, so that's just one example. You come over here. Let me just show you this. For the same amount, if you were paying $1,600 a month, you could come over here and let's look at this house. This is a bigger house. It's not really that much bigger. It's more expensive though. Let's just find new construction. We got new construction here. $260,000 new construction house. Okay, not even built yet. D.R. Horton, whatever. Not the best, but brand new home. Look at that. You got $864 a month. They're looking at it now. This is making some assumptions here that we need to adjust. Let's just do it my way, okay? 259,700. Same interest rate, same fix. 1130 a month, okay, for the mortgage payment. 259,700, 1150 a month for the mortgage payment. Then you've got PMI. Now you're at 1,300 a month. Add in some insurance. It's a brand new home. It's going to be cheap. Add in some taxes. You're at $1,630 a month. So for the same amount of money that someone would have paid to rent this older home, smaller home, right? They could own a brand new home. And we can do this all day. Like if you were living in an apartment and you were paying $1,200 a month, okay? Let's just say you're paying $1,200 a month. Well, here, okay, we've got a little $175,000 house, okay? Certainly better than an apartment for a lot of people. Some people like living in apartments. You know, if an apartment is not your thing, here you go. Here's a nice little house. Very nicely done on the inside. Got some, looks like granite countertops, hopefully. Stainless appliances, you know, nice flooring, good neutral colors, you know, all in very nice home. Okay. This home, the mortgage would cost you. Here, let's shift. This is not what I wanted. They're trying to get me to fill out their lead forms. I don't want y'all to do that. I want y'all to talk to me. Okay, same home, $175,000. $589 a month mortgage. Let's see how that breaks down. See here, we can adjust it. We can go 3.5%, $175,000. Okay, 30-year loan, 3.25%. Honestly, your rate would be more like 2.75. At this point in time, rates are really low. But I like, you know, maybe don't buy a house this year. Maybe they go up. I like to do things a little different. Okay. Home insurance is definitely going to cost you more. It's probably going to be $1,500 a year. Your property taxes are probably going to be more than that as well. Let's just call it that. Okay. Now, so we've got this. Your estimated monthly cost to own this really nice $175,000 home that we see on Zillow. Okay, it's very nice. It's 1,500 square feet. A great starter home, or maybe even not a starter home, right? I mean, it's tastefully done on the inside, if you like that kind of thing. Okay, less than $1,200 a month. So I can own this with a mortgage for the same price, or cheaper actually, that I could live in a 2-bedroom apartment around the same price, right? Sure, this apartment has nice amenities, but it's an apartment. They tell you what to do. They tell you not to be loud. They tell you can't do this, can't do that, blah, 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 blah. Apartment living isn't for everyone, right? Not for most people. So you can live in an apartment, or you can live in a house, a nice house, for the same amount of money or less. Because if you were to rent a house, you're going to pay $300, $400, $500 more a month to own a house than you would to own a home, or to rent a house than you would to own a house, right? So I just wanted to illustrate kind of to y'all that this is something that can be done. Like you can own a home, a nice home, for the same amount of money that you're paying every single month in rent. So I hope that video was very helpful to you, and that you were able to see that there is a path forward in renting, and that you can get out of renting and own a home, and it isn't some big, huge expense. In fact, in a lot of times, it's actually cheaper to own a house than it is to rent, especially when you consider the fact that rent prices just keep going up and up and up and up and up and up and up, out of sight, right? So rent is extremely high right now for a lot of reasons. If you're tired of that, if you're tired of feeling that pressure of renting, we can help. We can help you own a home. Here's the deal, is that there are 0 down programs available, especially in a place like Denham Springs. The whole town is available, right? And all of those suburbs of Baton Rouge are that way. All of the suburbs of New Orleans are that way. All of the suburbs of Lafayette are that way. Lake Charles, Alexandria, Shreveport, Monroe, all of them are eligible for zero down home loan programs, and you don't even have to have perfect credit. And if you don't work for that, maybe you make too much money, maybe your credit's just a little too low, there's FHA, 3.5% down, under a 3% interest rate right now, just bananas, guys. So if you're tired of renting, if you're tired of filling that squeeze, you filled out a form or you've watched my videos or whatever it is, or you're on my Facebook page that's got you seeing this video, I would love to help you. I would love to help you own a home. I would love to help you get a good low rate regardless of your credit situation. I would love to help you get an affordable monthly payment that's the same or less than what you're paying in rent, unless you're looking to upgrade, right? And you may be ready for that. Whatever it is, we want to help. We want to help you become a homeowner. We want to help you stop paying your landlord's mortgage every month and start building wealth for yourself. So I'm Channing. I'm the broker owner of Bayou Mortgage. Thanks so much for checking out this video today, and I look forward to talking to you soon.